We are thrilled, as always, to have Cern Basher, economics expert or something. How do you describe yourself? What is your.
Yeah, good question, Randy. I don't know that I would describe myself that way.
Okay.
I don't know. I usually leave it to others to describe me, and they usually get it
Oh,
wrong. So who knows?
I call myself a salesman and a product man. That's what I am. So, but yeah, and a few other things, so a couple other things along the way. But yeah, you don't have a quick description, huh?
I think I'm just trying to be less wrong, I think
Less
is my
wrong.
goal.
Okay, well, there you go. Elon would like that. Well, so you
Yeah.
got anything exciting to talk to us about this morning?
You know, Randy, I have a few things, and I think this is going to be the best show we've ever done.
Wow. And that's saying something because we've had some exciting shows.
We've had some bangers, and this
Yeah.
one could be right up there.
All right.
So let's get started. We've got quite a bit to talk about today.
I'll give you the floor.
All right. Well,
For the
let's start
screen.
with this beautiful image that Tesla shared and Elon retweeted, reposted
Yes.
of this magnificent Tesla semi, something that a few people said would never happen.
Right.
Bill Gates being one of them.
Right.
Anyway, we'll come back to this in a minute. We're going to talk about this semi factory here in a minute.
Okay.
The first thing I want to talk about is the stock.
Right.
And I'm breaking tradition. I usually don't talk about the stock too much. As a professional financial advisor, I need to stay away from discussions about the stock.
Right.
So I must preface this conversation by saying what we're about to talk about is not financial advice. Okay.
Okay. Yep. Got it.
That said, here is a chart of the stock through yesterday's close from when Tesla first became a public company.
Yesterday being Wednesday.
Wednesday, yes.
Wednesday's
Yes.
close. Yes.
Stock closed at 263. What's wrong with this chart, Randy?
What is wrong with this chart? Well, it looks like the old global warming hockey stick chart where, it has this verticality at the end, which seems odd and strange.
Yeah, at first blush, you would look at this and say, okay, this doesn't seem so strange. It starts at 0 and goes on up. Here's 100, here's 200, here's 300, here's 400. Nothing strange about the scale. But the problem is when you look at stock prices over a long period of time, the scale actually is an issue.
Yeah.
And what you really should do is look at it on a log scale.
Oh, okay.
And what this does, it makes an equal distance change on the chart into an equal percentage change,
Gotcha.
right? So when the stock goes from $1 to $2, 100% gain,
Yeah.
the next distance that's equal should be from 2 to 4.
Right.
Okay, and you're kind of seeing that here. These numbers now look a little bit weird, but this is a way to kind of look at the chart in terms of percentage terms. And it's a
Right.
really good way to look at long-term charts. Otherwise, you get the hockey stick.
Right.
Okay. So it puts the move in Tesla stock into a bit more perspective.
Okay.
It makes the stock look a little bit less volatile than it appears in the previous chart. I mean, the stock's still plenty volatile,
No kidding.
but still, this, you can see visually how that is very different than
Yes.
this chart.
Yes.
And it's exactly the same data, just with a different scale.
Right.
With the latest move, one thing that I've noticed is that if you were an investor and you bought at some of these high points, with the move up in the stock, there's now fewer and fewer people, assuming they held their shares,
Right.
that were in this position. There's certainly a big chunk of people here in
Right.
2021, early 22. But we're starting to take out some of these peaks.
Yes.
So I don't know how many of these investors that bought the stock back here have held on. I suppose many of them might have sold down here somewhere.
And interestingly, as we're recording this on Thursday morning, which we may or may not publish on Thursday, we actually reached to 276, which would have taken out a bunch more at 276. But then a little bit of news from Bloomberg, and we dropped to 246 last time I checked, in about 3 minutes. because the meeting was moved 2 months. Maybe a
Maybe. We
rumor.
don't know whether the Robotaxi unveil has been moved till October. I suppose that is possible, but we don't know if that is true yet.
Right, right.
And I would say it does not matter at all.
At all, yes.
Okay. So this was a great post. These lines here from Peter Lynch. He's
Peter
saying
Lynch,
that
he never made any money in the market.
no, no, very unsuccessful Fidelity fund manager. Yeah, no, probably one of the better professional investors of all time.
Right.
And he's saying that his biggest mistake was that he always sold stocks way too early.
Mm.
And he tells a story here of Warren Buffett calling him up, asking if he can use a line from his book, which was selling your winners and holding your losers is like cutting the flowers and watering the weeds. So when Warren Buffett calls you to ask to use something you said, that's pretty good.
That's pretty good.
And he's saying here that the one line he picked up in my whole book has been my greatest mistake.
Yeah. Yeah. How about that? Holy cow. That's great. I love it.
Yeah. And so let's put some numbers to this. I'm a numbers guy. So there's actually a research paper that was, I have a draft copy from July 2019. I'm not sure when this was finally published. The title of the paper was kind of a boring title. Do global stocks outperform US Treasury bills?
Huh.
Now, I must tell you that the information in this paper was actually far more interesting than this.
Okay.
And here's the summary. They studied over 61,000 firms from January of 1990 through December of 2018.
Okay. That's a long period.
A decent amount of time. Okay. And the total global stock market wealth creation over that time period was $45 trillion.
Okay.
Okay. So not bad.
Yep.
So they discovered, though, that 61% of the firms actually generated negative wealth.
Wow.
37,000 of the companies they looked at didn't generate any wealth.
Wow.
And they reduced the full sample wealth by almost $22 trillion.
Huh.
Okay, so that's why they were looking at comparing to T-bills. Like, obviously, those firms did not beat T-bills.
Right, right.
But to me, the more interesting thing was kind of the lottery-like nature of the stock market winners. So in the next paragraph, they showed that 5 firms, which is 0.008% of the total, with the largest wealth creation during the time period, and these 5 companies were Apple, Microsoft, Amazon, Alphabet, and Exxon. They accounted for 8% of the total net global wealth creation during that time period.
Wow.
Just from 5 companies.
Right.
And the best performing 306 firms, which is half of 1% of the total, accounted for 73% of the total wealth creation. And the best 811 firms, which is only 1.3% of the total, accounted for all of the net global wealth creation.
Oh, gee.
So a couple lessons here, right? Like, if you're going to be picking stocks, it's hard to pick the winners. It's almost like buying a lottery ticket.
Sure.
But on the flip side, if you've got a winner, don't be necessarily in any rush to sell it.
Yeah.
Again, this is not investment advice, but these are things that are worth thinking about in terms of, depending on how you're investing. If you're selecting individual companies, and I would imagine that almost all your viewers own Tesla or other companies, you just have to be very thoughtful about your approach.
Yeah. And if you go back and look at those 4 companies that they mentioned, 5 companies, Amazon and Alphabet would have been in business yet or not quite or almost. Apple, Microsoft, and ExxonMobil were already, stellar companies, but the other 2, not so much.
Yeah, they were been pretty new companies. Amazon, I think, started in the mid 1990s, if I'm not mistaken, 97 maybe.
Yeah.
So yeah, didn't even start at the beginning of the period. So this is also kind of funny that this is from today. Andre Karpathy says, every time I diversify, I lose money.
I saw that one.
Right. So it's almost like he saw my post and he
Right.
responded with this. And then Elon had a great comment. He said, Tesla.
Right.
So I thought that was pretty funny. But to your viewers, please don't forget the lessons of that paper. I think they will probably apply to any long-term period. There will be very few winners.
I have this is not investment advice either. I'll let you decide how wise this is. When I was day trading and I made a lot of money the year that I day traded, 33 times my investment actually in a single year. My daily admonition to myself was, is this stock fundamentally the right stock to be in at this time? Every single day, trying to look at it with fresh eyes. If I were not invested in this stock today, would I buy it today?
Mm-hmm.
And it was like, keeping the eye on the ball with regard to whether the company was continuing to fundamentally be what I thought it was, and or if I had never bought it before, is it the right company at this time?
Yep. And again, I don't advocate for any sort of short-term trading.
Well,
yeah.
it was really rough on the old ticker, I'll tell you that.
Yeah,
I don't mean the stock ticker.
Right. The problem with making too many investment decisions is just that. You've got to make too many decisions and you've got to be right.
Yes.
It's much better to make one decision and be right long term than have to make decisions every single day.
Right.
AJ posted this nice analysis, and I'm sorry, this is probably really small.
Not bad, not terrible.
But he looked at the current rally compared to other rallies after unusually long gaps and tops over the past 4 years. So the rally that we have here now is the first row. Started on June 25th, and he's got the last day here as of yesterday.
Mm-hmm.
Started at 182, closed at 263. It's a 44% gain.
Right.
And the length of the rally in trading days totals 11 days, which is the second longest rally that he's got on this table.
Mm.
And he shows the daily gains, and then he shows what kind of pullbacks we had. And so perhaps today will be the first pullback in this rally. Rather than go over this whole list, this is interesting to look at. I would encourage people to look at AJ on X, or pause the video at this point and take a look at the details.
Right.
Again, this is a little bit short term for me, but still I think it's interesting just to kind of look at how previous rallies have gone. AJ's comment here was that the second half of the rallies tend to deliver higher gains than the first half. 7% in the first half versus 8% in the second half. So maybe that's not statistically any different, but and in most cases, a rally is followed by just 1 day of a pullback.
1 day. Okay, interesting.
In this little sample size of 20 rallies or 19 rallies.
Huh.
This being the 20th one that we're in now. So anyway, this is, for what it's worth, I thought this was interesting.
Right.
Okay. Volume. Let's talk about volume.
Yeah, that's been an interesting part. Yeah.
Everybody talks about the stock price. Everybody looks at the stock price, but behind it is volume, the volume of shares traded on any given day. So what I did here was a little analysis of Tesla and some other companies over the last year,
mm-hmm.
and looked at the volume times the average price during the day.
Mm.
And I took a shortcut to calculate the average price. I looked at the open, the low, the high, and then the close, and averaged those four together.
Okay.
Okay. It's not perfect, but close enough.
Right. Mm-hmm.
And then I calculated the amount traded, the value of the shares traded each day.
Mm-hmm.
And that's what's showing on this chart, is the daily value. And so you can see that there are peaks where Tesla stock has traded over $45 billion in 1 day.
Wow.
Okay, I can see 4 of them on this chart.
Right.
Over the last year. But you could say over the last year, up until quite recently, the amount of volume traded in Tesla stock was slowly declining.
Mm-hmm. Yeah.
And I've got the person sleeping in the bed there in early June. Tesla investors not so interested in trading in the stock.
Yeah, yeah, exactly.
But they woke up, and now you can see at the top there's a bit of a party going on. Okay. So here's how it compares, though, to some other big companies. So Tesla, its daily average over the last 12 months is about $24 billion a day. And it's traded $5.9 trillion worth of value in 1 year.
Yeah.
Almost 6 trillion traded in Tesla stock. It's staggering.
Yeah.
The current market cap about 840 billion. So it's traded about 7 times the current market cap of the company. Right. So it's staggering the number of shares that are just trading hands every day.
Yeah, yeah, yeah.
Right. Now, NVIDIA in this time period actually is outpaced Tesla in terms of trading volume, trading value, 31 billion a day, almost 8 billion of NVIDIA stocks traded over the last 12 months. Its market cap now is over 3 trillion. And based on that current market cap, it's about 2.5 times. But if you factor in the fact that NVIDIA's market value has gone up so much,
Right.
the amount of market cap actually is way more than 2.5 times.
Right, right.
But it may not be as much as 7.
Yes.
My guess is it's probably around 5, maybe 6.
Mm-hmm.
But then if you look at Amazon, Apple, and Microsoft, they're trading between 7 and 11 billion a day. So it's, less than half of Tesla.
Yeah, substantially. Yeah.
Right. And 2 to 3 trillion of value a year, and less than 1 times their market cap, their current market cap.
Right.
So traders aren't so interested in those stocks generally. There are times during the year, and I'll show you really quickly what that looked like for these other companies. But Tesla and NVIDIA are 2, very popular stocks for traders.
So do you have any analysis, maybe that's coming up, but do you have any analysis on why you think Tesla is traded so much more, or just off the top of your head, why it's traded so much more?
Well, I think there's a huge retail participation in Tesla,
Right.
which helps.
Right.
But I also think that there's enough volatility in Tesla stock that hedge funds and other institutional players, pile in and then pile out.
Boy, those were going to be mine too. So we're 100% aligned on that. Volatility has always been my sweet spot. I have always loved the stocks that were volatile. From the time I was in my early 20s, I was playing Fairchild camera and instrument, which would go from 30 to 110 and then back to 30 and then back to 110. It was crazy.
Crazy way to make a living, Randy.
Yeah. But in those days, I had a much stronger heart.
Yes, yes. So here's the same chart for NVIDIA. Investors were, over the last year, they were the most sleepy at the end of the year, which actually would be expected. That's usually a pretty quiet time between Christmas and New Year's.
No.
And they partied pretty hard there in March, over 100 billion traded in 1 day.
Wow.
And there's been some other periods of trading activity as well. Here's Amazon. It looks like trading kind of spikes around each quarter. It looks like a very sort of quarterly pattern to me.
Interesting.
And then here's Apple. Trading perked up around Apple's AI announcements.
Right, right.
50 billion a day. And then the end of the year slumber as well in Apple stock. And here's Microsoft. End of the year slumber, or maybe Thanksgiving slumber in the case of Microsoft. And maybe the OpenAI kind of wranglings created some volume in Microsoft stock towards the end of last year.
Yeah.
If I was to guess what's going on there. Okay, so let's totally shift gears.
Okay.
Randy, I think I have completely figured out what I'm calling the recipe for autonomy.
All right. Yay. Good for you.
Okay. It's 5 steps, and your mind will be blown when you see how easy this is.
Okay.
Okay. Here it is. 1, build 3 gigafactories. Easy peasy. Tesla's showing how to do that.
No problem. Yeah.
Okay. 2, sell 5 million EVs. Okay. Easy peasy. 3, invest billions in AI compute. And also, I would
billions.
say you need to attract AI talent. It's not just the compute, but people too.
Yeah, yeah.
Okay. 4, collect billions of miles of data. Okay. And you can't really do that unless you've done number 2. And you can't do number 2 unless you've done number 1, right? So these are all built on each other. And then 5, this is probably the simplest part.
Yeah.
Kindly ask an AI system to create a perfect autonomy model for you, a driving model.
Exactly. Exactly.
It's all you have to do, Randy. This is this easy.
Yeah, and then spend the first 3 or 4 years trying to do that using traditional methods of coding, and
Mistakes were made along the way.
well,
sure.
it was just what was available. There was no,
Yes.
we didn't know about LLMs and yeah, so yeah, and amazing that even after they changed the method and it was dramatically better, it still didn't take 2 weeks to fix it. It's still been a hard job.
Yes. Now, in all seriousness, none of this is easy. This is a colossal effort at every single point in the path.
Yeah.
And I'm saying all this because, we continue to hear from various people that, once Tesla solves this, then others will have solved it too.
Right.
And I don't know where this magical thinking comes from, but no, it's not that easy. And I would take it a step further, and we'll get into that in a second, but Tesla is not done when they solve full self-driving.
Right.
And I'll show you why in a minute.
Okay.
Okay. So Pedgy had this post that Elon responded to, and he was talking about, if they hire the former Uber CEO, the stock would go to 400. And I thought Elon's comment here was great. And Elon said, all that matters is improving Tesla self-driving AI such that miles between interventions is greater than human. Okay.
Yes. Well, as soon as I saw that, it became a new among the top 100 most important quotes that Elon has ever said. Now, this one is not one that most humans can take and apply to their other businesses unless it's a matter of focus. It's a matter of understanding that, yes, you have 100 problems to solve and 100 ways you could do that, but you need to focus on the ones that really matter. And he's saying, and he actually repeated this multiple times in response to other people putting up responses, which made me think, well, he's repeating it. Why? Because this is it. This is the focus. This is what matters. Yeah.
And I'll show you why.
Okay.
Okay. I'm going to give you some numbers. The first number is 3.2 trillion. That's how many miles are driven in the United States each year by everybody in the US.
Okay.
And roughly, give or take, it's been pretty stable, I think, for a few years.
Mm-hmm.
I don't know why they say, it's enough to take nearly 5,000 trips to the moon and back. That doesn't help me understand how much 3.2 trillion miles is.
Right.
Anyway, here's another number. On average, there are about 1.8 to 2 automobile crashes for every million miles driven.
Okay. Yep.
Not in Teslas, just in vehicles in the United States.
Mm-hmm.
Okay. Now, this chart shows for Tesla vehicles with no active safety and Tesla vehicles with autopilot engaged, not FSD, autopilot.
Right.
How much lower it is. But for now, let's focus on this number. Okay. So I just, instead of 1.8, I'm using 2. 2 crashes for every million miles.
Yep. Mm-hmm.
Okay. I made this post and I made a colossal error in my calculations in this post. So I'm going to skip this.
Okay.
And take you to the corrected version. Okay. Let's say we start a Robotaxi fleet, Robotaxi network.
Mm-hmm.
And initially, we have vehicles that are doing 500 million miles in a year.
Okay.
And if they crash on average 2 for every million miles driven, you're going to get 1,000 accidents. Okay.
Right.
Doesn't sound so bad. Now, think about what happens when you scale this network. If we get to 5 billion miles driven,
Mm-hmm.
and again, 3.2 trillion right now in the US, so 5 billion is a fraction of that.
Right.
you get 10,000 accidents.
Right.
50 billion, 100,000 accidents, 500 billion, half a trillion. Okay, you've got 1 million accidents you got to deal with. And if you get to the point where now you've replaced all vehicles and you're doing 5 trillion miles, because Robotaxi is cheap and people are taking more trips. And I use 5 trillion because it's just easier to go from 50 to 500 to 5 trillion.
Sure.
You've got 10 million accidents you have to deal with. I don't think Tesla could hire enough lawyers. Okay. Now, my flaw here is two accidents per million miles. FSD is nowhere near that. We already saw in the previous chart, it's much lower than that, even without FSD.
Right.
But let's say you improve that by a factor of 10.
Just 10. Yeah.
Just 10. Okay. So now it's 0.2 per million. Okay. Your 10 million accidents drops to 1 million. I'm sorry, it's not good enough.
Yeah, because that would still be a lot of lawyers.
A lot of lawyers. Right. So this is why Tesla has to continue to improve FSD, even though it may be solved. They have to figure out a way to get the accident rate down. Now, I realize that there's going to be plenty of other people out on the roads besides robotaxis, that could cause accidents. I'm looking at accidents that have caused by the vehicles themselves running FSD.
Uh-huh.
Now, at this point, basically all there is robotaxi. But okay, so what we need now is another 10x improvement. We need 0.02 accidents per million. You would still have 100,000 accidents.
Right.
Right. So at scale, these problems are significant. And Elon is thinking about this. Elon understands this, obviously.
Right.
Right. So this is why the investment in compute and improving FSD is going to be a job for a long time to come.
Right. And of course, I think maybe another way to look at this is that you're looking at only the United States. But if we recognize that it's going to be a very long time before all the cars in the United States are robotaxis, but we maybe look at your big number, your biggest part of the graph as being worldwide within 10 years or so, maybe the worldwide number only having 100,000 accidents worldwide would really be remarkable. And that's not even taking into consideration that as you get closer to that, cities and regions and countries will start to adopt methodologies that will make robotaxis even better. So there'll be infrastructure changes that will help. And then you'll also have the fact that robotaxis talking to one another will begin to be a big deal in terms of avoidance. So there's at least those two additional ones that I've contemplated that will dramatically reduce accidents as we get closer and closer to having, let's say at some point, 30%, 40% of the cars on the road are robotaxis. Cities and regions are going to have to adopt their signage, some of their street design, etc.
Absolutely. We've talked about the idea of robotaxi only streets,
right,
or certain times a day, perhaps, or even requirements to put sort of technology to reduce accidents on human-driven vehicles.
Well, you can imagine that your street signs, how hard would it be? How inexpensive would it be if your traffic signals had a little device on them that gave an electronic signal, whether that's a speed limit or whether that's even a parking sign could have a device that emits an electronic signal rather than having the car read the sign at all times.
That's right. Yep. There's all kinds of things that can and likely will be done over time. Yep. Absolutely. Here's just a quick transition. There's now 2,000 charging stalls in Norway.
Yeah.
This was a special one. The 2000s, they painted it in the Norwegian flag. I thought this was kind of cool.
Yeah.
It'd be neat if there was a few artists that could make some interesting superchargers.
Yeah, for sure.
Okay. Shifting gears again. Let's think about Tesla energy in terms of vehicles.
Yes.
For a minute. Okay. So this is a little table here that takes the Megapack business, which the current capacity of the Lathrop factory, as stated, is 40 gigawatt hours or 40,000 megawatt hours. Purchase price of a Megapack is about $1 million, give or take.
Sure.
The factory revenue at capacity would be $10.2 billion at today's current prices. And if we take the gross margin from Tesla Energy of 24.6 from Q1, that's $2.5 billion of gross profit.
Right.
So what's the equivalency of that in terms of vehicles? So if I'm using the Model Y as kind of, the vehicle of choice to compare to, and if I take the gross margin in autos of 18.5%, and I say that also is the gross margin for Model Y, that may or may not be true.
Right.
But 18.5%, that gets you to auto revenue of 13.6 billion. And if the average purchase price of the Model Y is, say, 45,000, just use a round number, you're at about 300,000 Model Y equivalents as far as the Lathrop Megapack factory capacity.
Right.
Okay. Now, we know that the margins on Tesla Energy are going to go up.
Right.
Right. We just don't know how much. But if they went up to 28.5%, now you're at about 350,000 vehicle equivalents. Okay. And then finally, we know that they're building a Megapack factory in Shanghai.
Right.
They're going to double the capacity to 80,000 megawatt hours. Using the same margin assumptions from the prior slide, now we're at about 700,000 vehicles. Okay, Model Ys.
Sure, sure.
Okay, but taking one step further, let's look at it in terms of the future compact car. It's about 1 million of those. Okay, if they're priced at 31,500 a piece.
The average, yes.
The $25,000 car with inflation, maybe 31,000.
Or with more expensive versions.
Yeah. So it's just interesting to kind of look at the equivalency of energy storage versus the vehicles. This isn't perfect, but I think it's instructive to sort of show the capacities that they're building on the energy side, what that means for vehicles.
Yes.
Right. It's 700 to 1 million-ish vehicles, depending on what you want to use.
Yeah, and I think you may not want to do this. I've talked about it quite a number of times on the show. I do the same thing with semis. People talk in terms of, well, semi, well, someday, there might be. But the truth is that, one $200,000 semi at probably much larger margins than cars, add in a little bit extra for, okay, maybe even double for infrastructure that would have to be purchased to go along with it. And it takes a very few semi trucks to equal a bunch of cars.
That's right. Yeah, the semi one day will be a very significant business. Yeah. The sad thing about the semi is no one may notice it because of developments in Tesla's other businesses like Robotaxi and bots.
That's definitely going to be a problem. Although semi will be a big contributor to that, because I'm sure it won't cost $8,000 to get FSD on a semi.
Yeah. Yeah. Now, this is breaking news. This is from Morgan Stanley today.
Yes.
And so they're what Wall Street likes to do is have client lunches, lots of client lunches. So talking about 20 client lunch attendees here. Anyway, the vast majority of these attendees said they did not own Tesla stock in their portfolios in any meaningful size.
Wow.
Right. And Tesla is one of the largest companies in the
on
market.
the planet.
Right. And they've decided to not own it in meaningful size. Now, I don't know what meaningful size means, but it definitely would mean not overweighting Tesla, and it's probably significantly underweight in their portfolios. Okay. And so, he says here, the struggling car business, which is 90% of revenues, can be measured and tracked. The AI, robotics, FSD/robotaxi, and much of the energy business is seen as too small to matter, or does not produce the same quantum of weekly/monthly information to be tracked.
Yeah.
Right. This is why these guys don't own it, because they don't understand it. They don't have access to information, i.e. they don't want to think.
We've talked about this before. Famously, it was the General Electric problem That's probably the one that's talked about in the SBA program, the MBA programs, where they started splitting the company up because the small divisions were not getting any value, even though those small divisions, if they as standalones, were in the top 500 companies in the world.
Yeah. Yep. Yeah, the market goes through phases of that. There was an era in the 70s where big conglomerates actually were highly valued in the marketplace.
Mm-hmm.
And then it kind of flipped the other way. But yeah. So they also go on to say here that the core energy business barely came up at all in their discussions. For 90 minutes, we talked about energy storage, humanoids, AI, FSD, China, geopolitics, and the Robotaxi day. So, and he slips in there, invitation still not received. I suppose he's hoping that Elon is reading this or somebody on the Tesla team.
Exactly.
So he goes on, Tesla has long been absent from the broader market discussion about AI for much of this year. Tesla is a car company, but in our opinion, it's just now starting to get more institutional investor attention about its other capabilities, including energy, manufacturing, AI, and robotics. Cars are just one of many form factors of embodied AI robotics. Randy, I think this guy, Adam Jonas, must be listening to you and I on your show and others. You know, he goes on, investors will continue to appreciate Tesla's ability to collect monumental amounts of data that can be used to improve AI and its AI and robotics capabilities.
So CERN, I'm not a big time author. I've just had a few niche books, but in November of 2022, these guys could have picked up a copy of the Elon Musk mission.
Yep.
We laid it all out for them, even Optimus.
Right.
It was all in there. We talked about the energy storage. We were the first one. Nobody in November of 2022 was talking about energy storage, not even in the X community, not on the YouTube community, but the book broke the Lathrop story. But all of it was in the book about Optimus, about robotaxis, the whole 9 yards, and pretty much is playing out almost exactly as we talked about. So,
Randy, your mistake was hiding it in plain sight.
Yeah, there you go.
Yeah. So speaking about energy, the Lathrop factory, 40 gigawatt hours of capacity, could generate profit equivalent to as many as 1 million Tesla vehicles.
Right.
I'm starting to think this guy's reading my posts.
Absolutely.
Right. But this was kind of interesting. He says that the Lathrop factory is a former JCPenney distribution center. We've talked about that.
Right.
It's only 436,000 square feet.
Right.
Contrast that with a 10 million square foot Giga Texas factory, right?
Yep.
So if you've got an opportunity to expand your energy business, the footprint of that is much smaller. So anyway, I thought that was interesting.
Yeah, and it's in a flip. It's a tilt up. I mean, you could build another one next to it. In 7 months. I watch it all the time here in the Inland Empire. They tilt these babies up in no time.
Yep. Transition here, Randy. This is one of your fans. What did I tell you, Randy? Tesla upgraded Model Y Juniper. Elon squashed this rumor very quickly.
Yep.
That it's not coming this year.
That's what he said.
Doesn't mean that it's not coming, in January.
Yeah, that's right.
Anyway, I just wanted to give TB his 5 seconds of fame here.
There you go. There you go.
Yep. All right. Let's take a look at the state of the global battery electric vehicle industry. This is another great chart by AJ. It shows 4 quarters, and then the darker line is the total. So Tesla, through the end of Q2, has maintained its stature as the #1 seller of BEVs in the world, with BYD nipping at its heels.
Right.
Volkswagen is a distant third. Decent number, almost 800,000 over the last year versus 1.7 million for Tesla and just under that for BYD. And then you can see it drops off pretty quickly.
Yes.
With Ford and GM on the far right side of this table. Anyway, it's been tough.
Yeah.
Okay. How has Tesla done, Randy, against their 50% growth per year target that they set?
Well, they did just fine, as this chart will show. They did just fine until the beginning of this year, maybe the end of 2023. They were above it. Yep.
So as it stands right now, if they had continued on that 50% trajectory, they would have delivered over 2 million vehicles over the last 12 months. In fact, they've delivered 1.75 million.
Right.
There's about 311,000 vehicles, something like that, difference right now. Now, we just converted a minute ago energy into vehicles. So I did the same thing here. Now, I'm not suggesting we should move the goalposts and include energy in this number. That's not what this was about. But I still think it's kind of interesting to look at the two combined.
Yes.
Right? Because at the end of the day, they're pushing out vehicles with batteries. They're pushing out energy storage. And one day they'll be pushing out robots with batteries as well. And if you look at those numbers, they're not quite as far off.
Right.
1.9, almost 2 million. There's about 72,000 difference, I think, right now.
Right. Right.
So, you know, it's been a tough environment. I mean, when you set these targets, obviously you don't know what's coming in the future.
Sure.
Right. But overall, all things considered, the company's executed pretty well.
Well, you know, there is a plenty of people that believe that if they'd only followed their advice, if Elon had only listened to them, they would still be on the trajectory just with the cars.
Yeah.
You know, I have to admit that I might be among them, believing that the Juniper coming out earlier would have been enough to make the difference. But we're, you know, Monday morning quarterbacking has always been a great sport.
Yeah, that's what I was going to say. We're not in the trenches. We don't see all the challenges that they've been dealing with. You have to move a lot of material around the world in order to pump out 2 million vehicles.
Yeah.
It's not an easy task. Right. For us, it's just numbers on a spreadsheet, but in reality, it's a very tough.
No, if it was easy, everyone would do it. Yeah.
That's right. That's right. All right. Let's shift to another promising business that Tesla has, and that's humanoid bots.
Yeah.
Elon responded to this post. The poster said, China will be the first nation with 100 million people and then 1 billion robots. I'm sorry, it may be 100 million bots. I'm not sure if it's people. No, obviously it's not 100 million people. He's talking about bots. 100 million bots and then 1 billion bots.
Oh, I see. Okay.
Elon's response was, the future will have far more robots than people.
Yeah.
And again, this is not anything new from him. He said statements similar to this before.
Sure.
At least he's consistent. He believes it. Okay. And then here's another one. The new Optimus design, which will be complete later this year, so we have something else to look forward to.
Yep.
Is something special. I don't know exactly what that means, but I'm excited to see what they will come up with here.
Elon, so the thing, you know, we know a lot of things about Elon, but one thing that we definitely know about Elon is that he hyperbolizes a lot. So everything is always going to be amazing. It's going to be, you know, blow your mind. You know, so so while I believe him that it will be special and it will be different and there will be new things about it that Scott Walter will be just will blow his mind. It may not be so special that the average consumer would look at it and go, oh yeah, I see, you know, but I think just the key is finishing it. And I've already spent a couple of different sessions with Scott and with last night with Jeff, talking about the ramifications of that and what that really means in terms of production. And we are all in agreement that we think thousands, possibly in the first half of next year, and maybe many more than that in the second half of next year.
Yeah, I think that's entirely possible as well. I concur. Yep. And again, from my perspective, I'm not so worried about, you know, is the bot coming out in the first quarter, second quarter, third quarter, fourth quarter. It's the trajectory. It's the longer term
Yes, of course.
That's where the huge opportunity is. This was also kind of interesting. Peter Diamandis says, well, what happens when large language models consume every last bit of the internet's human written knowledge? Right. And it's kind of unfathomable to think about that being an issue.
Right.
Right. And they call this the data wall. Right. And Elon's response is synthetic, validated against reality by humanoid robots.
Yeah.
So I took the opportunity to kind of expand what I thought Elon was saying with this, right?
And I read every word of it. I read every word of this post. I thought it was fascinating. Yeah.
It's worth thinking about for sure. And basically, you know, Elon's picturing a future where artificial data is created and then tested in the real world by robots to make sure it's reliable.
Yeah.
I'm still wrapping my mind around all that. Right.
Yeah.
Anyway, lots of great things to come with humanoid bots. That's for another day. AJ is talking about the 0% financing that Tesla is doing. And I don't want to spend a lot of time on this. This is a bit of a wonky topic. For those interested, go check out his post. He gives quite a bit of detail about sort of how this impacts Tesla on the balance sheet, interest income, et cetera. There's some good data here if people are interested in learning more about this. Okay, but in the interest of time, I won't dive deep into this in this show.
Let me just say that I've responded to AJ and others on this topic, and there's been quite a little bit of back and forth conversation going on. I've been talking about this ever since the 0% financing started. First of all, in the book, we recommend 0% financing. And have recommended it all the time, way before AJ was a factor. The 0% financing has an impact immediately. According to the late, I think it was maybe, who was it? I'm going to forget who it was today. It might have been James Catt said today, the accounting impact of 0% financing happens immediately. But even he still hasn't talked about what is the number? How do we calculate? How do we analyze what that number should be? And we don't know what percentage of this is in-house, whether this is Tesla's own balance sheet, whether they're lending the money themselves, or maybe eventually selling the paper that they generate from selling it in-house, or are they actually working with banks ahead of time and paying something to pay down these interest rates like you would on a house loan? So those are some unanswered questions that, while they may be a little wonky, there's a significant dollar and or percentage of margin impact. Now you can count it as margin, or you can count it as sales expense. And so that's another issue.
Yeah.
I'm perfectly happy to put it in either bucket, but let's know what we're talking about.
The thing that offsets that a little bit is what AJ has talked a little bit about here, is that it's typically only offered to customers with excellent credit scores.
Yep.
Right. And that's going to knock down the pool of people quite dramatically.
Right.
So I don't know how big this will be. I guess we'll see.
Right.
But I think it's interesting to be aware of it. It's not something I'm spending a lot of time analyzing at this point. We talked about the Tesla Semi.
Yes.
There's a great account, a guy who's starting to do videos of the project site. There's a whole bunch of steel sitting here now, and they're making some holes in the ground for the foundation. It'll be fun to watch this go up. And you can see the Gigafactory, the Nevada Gigafactory there in the background.
Yeah.
It's right next door.
Yeah.
So I would encourage you to go follow 𝐒𝐮𝐬𝐭 on X.
Yep.
He's the drone pilot here. So it'll be fun to watch the semi-factory be constructed.
I'm expecting this one to pop up fast, and so is Jeff.
Yeah. This was from a post that he did back in April, and he says, Tesla Semi fun fact, the Semi maintains maximum legal highway speed whether going up or down a steep grade. Right, and contrast that with any other truck that you know of, how they crawl up the hills and then fly down the hills. The Tesla Semi maintains a more of a constant speed.
Yeah.
So that's interesting.
Yeah, yeah.
And then shifting to other breaking news from today, CP, a little thing called CPI.
Yeah,
Looks like it was pretty favorable.
no kidding.
Yeah. So the overall was just under 3%. The core is down to 3.3. The trend in the core, trend is your friend here. And then in terms of components, used cars are now down 10% year over year.
Mm-hmm.
Gasoline prices down 2.5%. Where this point 2 years ago, gasoline prices were up 60% year over year. So things look pretty good. Shelter, I think, is still a little bit high. Transportation costs overall, I guess, are still a little bit high.
Yep.
But everything else seems to be making some nice progress.
Right. It was interesting that regular rents were still high.
Yeah.
I'm not necessarily long-term, but maybe long-term. I am nervous that rents, while they were down for a while to 0, maybe 1%, I think the 94, 95% occupancy rates right now would suggest that rents could be trending back up again. And this could eventually impact this number before we actually get out of trouble.
Yeah. Yeah. We'll see how that plays out. The coast is never all clear.
No, never all clear.
The good news is that right now, market expectations for a Fed rate cut in September have gone up to 87%.
Yes.
So I suppose that's as close as a sure thing in the stock market, in the markets.
Except then you have to apply Randy's rule. And I'm sure I'm not the only one that has the rule. If 87% are saying it, that's when I go, listen, we better rethink this.
What are we all missing? Yeah.
Yeah.
We're looking in the wrong direction.
Yep.
I thought this was great. We're coming to the final slides here. Warren Buffett's idea on how to end the US deficit in 5 minutes.
Yeah.
Just pass a law that says anytime there's a deficit of more than 3% of GDP, all sitting members of Congress are ineligible for re-election.
Right.
Problem will be solved in 5 minutes, Randy.
That's right. 100%.
It's so simple.
Yeah, there's many similar kinds of recommendations, but that one I think would be the most immediate in its application. Yeah.
And as handsome as Warren Buffett is, I thought I would finish the slide deck as I usually do with a nice picture of a Cybertruck.
Yes.
This I think actually might be my Cybertruck. I don't know where they've taken it.
Oh.
But I'm waiting for mine. The last time I saw it, it was on a truck somewhere in Europe.
I see.
And maybe this one now is in Iceland. I'm not sure. But by the time I get it, it will have traveled the world.
There you go. Ours too. We're in the same boat on that one.
Yeah.
Okay. Well, all right. So do you think the sell-off today, again, this being Thursday, not sure when we're publishing, but in the big, huge sell-off of the Mag 7 today, NASDAQ way down today, is this sell the news? Is this people just moving money out of tech into the broader market? Because the Dow was up. I'm not sure if it still is, but it was up earlier. Yeah, the Dow is still up barely 22, but the NASDAQ's down 350 on this amazing news with regard to the CPI. And my first thought was, okay, they're just selling news. But then, yeah, that doesn't seem right. So maybe this broader market that has never attracted any money recently, although I understand the small caps are not doing well this morning either. I haven't checked that recently, but so maybe what do you think? What's your idea? I forget my theories. What are your theories?
Well, my short answer is I don't know and I don't care. Now, I realize that that's probably a silly thing to say when, you're talking to people about the markets. Like people expect you to know and expect you to actually care. I am, I think I've been clinically diagnosed as being too long-term focused.
Okay.
Right. But again, I take us back to that earlier paper that I presented about how there's so few companies that
Yes.
create all the wealth.
Yeah.
And for me, all this is noise.
Yeah.
It's all noise. And I'm sorry, it's not that interesting. I don't have much interesting things to say about short-term market movements. I really don't. But I really try to stay focused on what creates long-term value.
Sure.
Right. So I apologize to those that want me to say something intelligent or something that sounds intelligent about the market. And unfortunately, I'm not capable of that. But hopefully, I say something intelligent about the longer term opportunity, about various companies. Again,
Right.
Not investment advice. But that's where my focus is, Randy.
Got it. Got it. Okay, well, we knew this about you. Let me then just ask this question then, in terms of the long term. Are you a long-term believer that productivity is going to save us all?
Yeah. In simplified form, GDP is labor times productivity.
Right.
Humanoid bots and AI in general will massively increase the amount of labor available. And it's easy to see it in humanoid bots because you can see the extra labor, right? You can count how many bots there are and say, okay, that's the equivalent of XYZ number of people.
Right.
But also, I think humanoid bots have the ability to accelerate productivity. Eventually, they will be so capable. There'll be skills that humanoid bots have that I don't have.
Right. Right.
So you multiply then that increase in labor by that increase, that productivity factor, and you potentially get a step change in GDP.
Right.
That's what I see is coming.
Well, it's similar on the AI side. If we turn
Yeah.
you and I into superhumans, because what used to take me an hour now takes 5 minutes, and or what I do is twice as valuable in the same amount of time, then we get the same effect in terms of productivity. So have you, I think a lot of people expected the product, including me. This is one where I was way ahead of my skis. I thought we would start to see some of those productivity benefits this year. Other people now are saying, no, you know what? We're probably looking end of next year, end of 2025, before they really start to show up in the overall economy on the AI side. And of course, on the robot side, you're talking about another couple of years after that. But do you think end of 2025, early 2026 is when we'll see it? Or do you think it's longer or shorter? I don't know.
Well, the first thing I think is we always have to question official numbers. We typically find out the way that we track things needed to be adjusted over time.
Yeah.
And I'm confident at some point there'll be some research and papers written that says, oh, we've been tracking productivity all wrong. or not all wrong, but in these ways, we're missing it.
Yeah.
Right. So that's part of it. But yes, I think that the impact of AI and the impact of humanoid bots, which is embodied AI, will be relatively slow at the start, right? We're going to be on this exponential curve, or maybe even a double exponential curve.
Mm-hmm.
But even so, the early years are small numbers, right? So we're talking about a step change in GDP maybe a decade from now. Maybe we'll see some of it come through faster than that, but my expectations would be longer term than near term. Now, investors, though, get ahead of that curve.
Right.
Right. So there's a difference between the economy and the investment markets.
Right.
Right. So even though these things may not happen for a while, investors are going to be trying to position themselves ahead of that.
Right. Okay.
Yeah.
Well, good. Hey, listen, as always, yes, I think, this was definitely the best one ever. And I will say that out loud to anyone who asks. But it's good. Whether it's the best or whether there was one a year ago that was even better, I don't know for sure, but certainly this was an outstanding presentation that covered a lot of bases that I think people should be paying attention to in their investment thinking and just in their interest, just in the, I ran a poll the other day asking people on X why they were so interested in this category. And I put 4 different options, and the 2 options that won by a landslide were Elon Musk and money. Those were the two things that are causing people to be interested in the category. So either they want to make a lot of money or they're just really interested in watching Elon Musk and all the things he's doing. So I thought that was a pretty interesting result.
Well, there's no doubt he's a fascinating guy who has his fingers on the pulse of many different things that are important. And not to add, wet blanket on anything, but I would just really encourage people to stay focused as much as they can on whatever long-term means to them.
Right, right.
The day-to-day stuff, try to ignore it as much as you can. It's not going to help you, trust me.
And he's trying to throw a wet blanket on you watching my program 3 times a day to see what's going on. But, it's okay. I'll still
Yeah, actually, no, I mean, the information's great. Just try to sit on your hands.
There you go. Something like that.
Something like that.
Okay, CERN.
Don't, start trading the stock based on information, but it's great to be informed. I highly encourage people to be informed. But
Which is what you do. Yeah.
Yes, just be careful about trying to chase the stock or trade it. It's a dangerous game.
All right. Again, thank you so much for your weekly updates, and to all of you out there, it has been great talking to you.
Thanks, Randy.